Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
So 20 years ago, Carol,
yes.
You were not listening to Oasis.
I was not.
Yeah.
That's not going to end for me, is it?
Yeah, never. That's what happens here.
I'm waiting for like the
You got to keep your secrets close.
or X's or
yeah. We're gonna be hearing
happen.
it. Well, 20 years ago, the first Ziggi's Coffee opened up in Longmont, Colorado, just northeast of Boulder. The idea behind it from the husband and wife team was, in the words of the company now, to create, quote, a space where people could gather and feel right at home. So fast forward to today. 96 stores.
Yeah.
Vast majority of them are franchised. They're set to pass 100 by the end of the year, and they're set to be in 22 states by the end of the year. Carol, they've sold more than 11 million drinks, and they've done it all by bootstrapping.
Yeah, that's pretty impressive. All right, Brandon Knudsen is with us. He is the co-founder and chief executive officer of Ziggi's Coffee, and he joins us from Mead, Colorado. Brandon, really cool to have you here with us. How are you?
I'm doing great. Appreciate you guys having me on.
You bet. Before we kind of talk about today and look forward, take us back 20 years ago. What led you to opening up that first coffee shop?
Yeah, it really goes back to college. My wife and I were kind of lost in school, and she got a job at a little drive-through coffee shop, and I had the great idea that, hey, let's just drop out of school and, we could do this. How hard could it be? And I did convince her. Her parents didn't love that, but I did convince her to drop what we're doing, drop out of school and pursue our dream of opening a drive-through coffee shop.
But it is hard. And like you kind of run into like whatever the psychological phenomenon is when you're only talking to people who've done it successfully, that, it sounds like it's easier than it is. But there are a lot of people like you who aren't still doing this because what they did not succeed. What made it work for Ziggi's?
I think it was a situation that we put ourselves in. We when we opened our first, it was actually called Gizzy's at first. I quit my job, and we were living out of the tip jar, living out of the whatever little money we could make, and we were just in a position where no matter how hard it get, we didn't have a choice, and so we fought through it and listened to customers and just grinded away.
But it's interesting, right? Like I think certainly in New York, there's a million places you can go get coffee. Well-known big chains, No Ziggi's. Not yet. Smaller places. I tend to like kind of local places, small coffee shops, but there's so many choices.
You're more of a third wave coffee person.
I am more of a third wave. Or make it at home because there's so many great devices. How in 2 decades has the market changed?
Well, I mean, drive-throughs huge now, and I give a lot of credit to Dutch Bros. They really put drive-through coffee on the map. I know Starbucks has done a great job with that as well. I think it's become, if you look at the product mix, I think when we first started, we were probably 80% hot coffee and 20% cold, and it's switched. It's like 70 cold between energy drinks, smoothies.
That's what Starbucks is too.
Yeah, it's just what people are looking for. It's very interesting.
It's funny that the drive-thru is so big for you, because when you started this company, it wasn't about drive-thru. It was about creating a space similar to what Howard Schultz has talked about when he expanded Starbucks into the so-called third place. Have you been able to kind of keep to the core of creating this space for people to gather and hang out even with drive-thru?
Yeah, I think it's kind of one of those unanswered prayers. We wanted a drive-through. We did not want to do a cafe. We just couldn't afford it. We were broke college dropouts moving to a new state where just knew my sister. And so the only thing we could really afford to do was we got really lucky and got this brick and mortar place in downtown Longmont. And what we learned there was, we were really in the service business. And no matter, I joke, I made horrible coffee back then, but I had great relationship with customers. So we learned that first and then translated that into the drive-throughs.
Were there moments, I feel like whenever we talk to an entrepreneur, even super successful ones like yourself, or those who are now co-founders and heads of, publicly held companies or used to be, there's always a moment where you're like, I'm not sure we're going to make it. I am curious how many times you felt that way.
For 12 years, probably 10 years.
Wow.
And the thing with us is every time we made it, if you got our first store really running and making some money, then I begged my wife to do a second one. And then we went back to, oh my gosh, what did we do? And are we going to make it? And then when we got there, we opened a third. And it's been an ongoing battle for sure.
So talk a little bit about growth, because Carol and I do talk to a lot of folks who are in the franchise business, and the idea that it's really asset light is, I think, appealing to a lot of folks because they are able to grow without actually taking on that risk. They can offload that risk. We spoke to the CEO of Wyndham Hotels last week about this.
Yeah, I think it's an interesting business model. I mean, how does that make it so much easier for you guys to grow without the risk? But you've also got to make sure the brand doesn't get tarnished.
Yeah, exactly. I mean, it comes down to training. We have a team of over 50 people here for 97 locations, because it's all about support. And I think of every store as our store from the standpoint of not wanting to fail, and from a risk standpoint, we're very close with all of our franchisees. So again, yes, it's capital. It's a lot easier on the balance sheet. But we still feel the burden, and we take every store seriously as if it were our own.
Brandon, how do you decide where you grow and how you grow, the rate at which you grow? Like, we want to ask you a little bit about Starbucks too, and kind of where they are. It feels like they're always the one everybody is measured against. But having said that, it felt like it got to a point where there's one on every corner, and how could it not be eating into the business of one or the other? So how do you guys proceed with growth in a smart and thoughtful way that really pays off in the bottom and top lines?
Well, there's two areas that we have success, and the first one is people. We need to find great franchisees, great operators. Because at the end of the day, we're in the service business, and employees look up to their owners, and they need to respect them, like them, and that's when they'll do a really, really good job, is when they really care about the owners. And so the people we're not like targeting a certain wave across the country. We don't care if we're in Maine or if we're in Southern California. If we have a great operator, we feel really good. The next piece is like, we love small markets, 15,000, 20,000 person towns, 50,000, wow, start getting over. We love those small markets.
Why?
Like Mead, where you're joining us from.
Yeah, we have 3,500 people, and this is one of the best stores in the company. We're plugged in the community. We have community events. We sponsor high school things. My kids go to high school and middle school and elementary school here. And so people just buy in. We are the coffee shop.
How much capital does somebody need to start a Ziggi's?
It's a wide range. We say, on the lower end, maybe 100, 150,000 on cash, all the way up to, if you're going to buy land and build and develop, 350, 400,000, if you're going to buy the land with down payment and those sort of things.
How quickly does that initial investment get paid off? How quickly is the return?
It depends on what year we're talking about now. Interest rates, it's such a wide variety for folks. It'd be hard to even tell you what that is.
It's okay. So it's obviously been harder in a higher rate environment, correct?
Oh, it's tougher. I mean, between interest rates and labor and cost of goods and those sort of things, it's always moving, and we're just trying to adjust as it goes.
And what about franchise fees that get paid to you? I mean, that's how you guys end up making the money. How do those sort of tabulate?
Yeah, so franchise fees are really the upfront fees to buy the rights to the license, and that money gets used to open stores and train. We're big believers in heavy training. We send a team of 6 people out for at least 2 weeks to open stores wherever they are, because it's really important to open really strong.
But then
from the other side,
yeah, go ahead.
I was going to say the where the money is made on our end, where the revenue comes in to support our team that supports our franchisees, is a royalty of 6% on the kind of adjusted gross.
Okay, so let's go to, we mentioned Starbucks before, and it's certainly a story that has been front and center for us as it's getting a new CEO, very well known in the fast casual space.
Very well known to you too.
Yeah, Brian Nickel.
You've known him for years.
We've, known him for a while. Yeah.
We've interviewed him a lot.
You and I have also both talked to him and followed him because he came in, just as the pandemic was getting underway, a tough time with a well-known chain that was, certainly had its issues, and really got deep into digital in terms of automating some things at the chain. But now it's Starbucks and getting ready, I think, taking over. I don't know if he's officially, but I know it is.
No, September 9th, I believe.
September 9th. Okay. But Starbucks fighting off slumping demand, customers are having to make choices. And I wonder what you think about price point. They're also dealing with some concerns in the Chinese market. They're looking to, cut wait times. They've got activist investors. There's a lot going on. What do you make of Starbucks woes? How do you think about where they are? And I understand you operate in a very different space, but I'm just curious what you watch in terms of their woes.
Yeah, I mean, it's crazy to, put ourselves up next to Starbucks, and they are the reason that we're all in this business. They educated the consumer, and we all should be saying thank you. And so I will never ever speak poorly on them. I think a little bit's just a little bit of tiredness of the brand. I mean, I think people are excited about new brands. Like I said, Dutch Bros and Ziggi's, it's new. I think the comparisons with us and them, we have a big food menu. Our food mix is 25%, and which makes us different than a lot of other brands. I just think that it's hard to stay on top. I think everyone's trying to knock you down, and I think they'll figure it out. They always seem to. We try to stay out of all the things that are polarizing. We just focus on giving great, authentic service to our customers, and I could see them going back to that. But honestly, we're head down, focusing on our franchisees, just trying to help them be successful. And it's a tough market out there, and we want to really spend our time just focusing on our customers.
What do you find when it comes to loyalty, Brandon? Like when people find out about the shop, do they come back? How do you have loyalty programs that track that?
Yeah, we have a loyalty. We're in the mid to high 50% as far as our in our app usage. So those are our loyal members. Right now people are not frequenting stores as much, and that's definitely our goal. But it's all about regulars for us.
What about like app ordering and stuff?
Yeah, we do some app ordering. It's not a ton. It's single digits order ahead. We're working on that. We just released our new app about a year ago, and working through some kinks there. But it's definitely a big part of it.
So what's next for you guys? And I am curious, you say, it's fun to kind of put yourself in the league of Starbucks. Having said that, is there a growth that you want to stay at, or a size that you want to stay at? Do you think about going public? Like what's the future?
I couldn't think of anything worse than going public for me personally. It just it doesn't look like a whole lot of fun to me. We're going to open, we loved it. We're targeting 45, 50 stores a year. We're going to let the franchise dictate that. If we can find awesome people to open 100 stores a year, we'll do that. But you can't force it. And that's what's great about not being public. We can grow at a pace that makes sense for us, and it makes sense for franchisees, and make sure we're putting them in positions to be successful.
Well, you don't necessarily have the pressure on you to go public or have an exit because you haven't accepted any outside financing, right?
Correct. No, our goal is to just help every franchisee make as much money as possible right now, and there's no pressures outside of that.
So profitable, I assume you are, given that you haven't had to take on any venture fundraising or private equity funds.
Yes. We've really invested in our team, and so that's been the biggest challenge for us as a company. Is we have 50 people, for our headcount's over 50 for 97 stores. It's a big number, but we really believe, especially right now with how tough it is out there, that we need to provide a ton of support and a ton of training and information, and we need to be relevant with LTOs and those sort of things. Which is why we have just an amazing creative team and operations team here, which does cut into that, but we're looking down the line.
How do you figure out operations and logistics at your scale, given that there needs to be a consistent customer experience at stores that are several states away from where you are in Meade, Colorado?
Yeah, technology is great. I think 20 years ago, this would have been really, really hard. But we have tons of metrics, from Zoom timers that measure how long the car is in line to obviously online reviews. But we use mystery shops, and we do that on a regular basis. Like once a week for 3 months when a new store opens, we have a mystery shopper every week that goes in and just takes pictures of their cup and makes sure that the drink is right and the food is hot and all of those things. That really helps us keep tabs on how people are doing.
Yeah, I mean, this is an undercover customer basically that provides the report to the franchise owner. So and what about actually like making sure the coffee is consistent? Do you roast the coffee all in one place and then ship it out to the different stores?
Yeah, absolutely. So we have an incredible partner, Delano's Coffee Roasters out of Seattle. They roast the coffee there. They put it on a semi and send it to Loveland, Colorado, to our distribution company, and then we send it from there up to our franchisees.
I love getting into the nitty gritty. Having said that, a place like you and kind of the towns, it sounds like, or the markets that you are serving can give us a really great idea about what's up with the consumer. And we have numerous stories that we've been reporting out here at Bloomberg about consumers making choices and trading down, or, not buying one thing so that they can do something else. So what are you seeing with the consumer? What noticeable trends that tell you whether or not the consumer is starting to feel some stress?
Yeah, it's frequency, right? Someone that used to come 4 days a week, they come twice now. And, where 2 years ago, $5 was nothing. Now it does matter. And we talk to our baristas, franchisees all the time about just, don't take that for granted. When you do get them those 1 or 2 times a week, make sure it's a great experience, because they're there for the coffee, but they're there more for the relationships and talking to someone on the way to work or after school. And so it's really important that we take care of them in that way.
And getting workers, labor costs, supply chains, all of that stuff, something that we obsessed about, right after the pandemic. Has all of that calmed down?
Yeah, labor's gotten much, much better. I mean, it's very expensive now, but as far as application, you might get 4 applications for barista, a year ago, and now it's 50. And so there's definitely, a larger labor pool.
Wow.
And then certainly supply chain, we're not fighting over getting products anymore. It's still expensive, but it's much more available.
That seems a little concerning, no? Up from 4 applications for a barista up to 50. Is that consistent across markets?
I have to check with my franchisees on that. I don't know. I would assume so. But again, I don't have that data in front of me.
Yeah, because that would show that there are a lot of people out there looking for work.
All right. I feel like the million, billion, $1 trillion question is, how the heck did you guys do this on your own? We talked about bootstrapping it, and Tim and I know in preparing for it, and you talked about it, that did you tap family, friends at all? But how did you do that? Or was it just a case of, I don't know, how did you do it?
No, I appreciate you asking the question. My mother-in-law gave us the first initial loan of $50,000 that we paid off right about when we paid our student loans off, which took about 14 years. So that really helped. And then my dad kicked in some money to help a little bit, about 70 grand. Other than that, it's been floating, begging in our early days, begging the sales tax department not to close our doors and let us have some time to pay it off. And it's just grinding. And I have an amazing wife who is just knows how to figure things out. And then just some key hires along the way. We just got really lucky and hired some amazing baristas that are, one of this now our vice president. And so We've just had a ton of support and help, and it's been hard, but man, it's been wonderful.
Hey, because this isn't available in many places, at least not yet, where our listeners and our viewers are, give us an idea of price point and sort of how it compares to other coffee places that people would go to. How much is a cup of coffee?
That's a great question. It depends on what you want, like a drip coffee. I even have my notes here because I knew you might ask those questions. I mean, we're priced right at probably Starbucks, if not on some items even a little bit more. And you might kind of scratch your head a little bit, but our taste is a big part of what makes Ziggi's great. Is when you go from a 12 ounce to a 20 ounce, the flavor profile is very much the same. But in order to do that, you really got to up your shots of espresso. You got to up your flavor. I think a lot of competitors kind of just add a little bit more milk to it. And so in order for us to do that, like in a 20 ounce, getting 3 shots or 4 shots versus maybe 2 at a competitor, we have to account for that. But considering those things, I would say we're a little bit less expensive. But if you were to look at 16 ounce, latte versus, say, a Starbucks, I'd say we're right there, maybe even a tad bit more.
All right. I've been popping in some zip codes. One last question. Definitely not in New York City, not right outside New York City. What's the closest Ziggi's to New York City?
Oh, my gosh.
New Hampshire, maybe?
New Hampshire. Yeah. We got North Carolina, New Hampshire. Yeah. That's probably as close as you're going to get there. You can make maybe a day trip over there.
Yeah, we could do a day trip.
Yeah, your coffee's going to be cold by the time you bring it back to New York, Carol.
70% cold.
That's true. Maybe the ice will be melted. Hey, real quick before we let you go, food.
You're not going to ask. Wait, are you coming to New York anytime soon?
Nothing in New York. We're working on New Jersey. Just from a drive-through standpoint, just challenging real estate market. But at the end of the day, we're just haven't found the right franchisee yet.
All right.
Challenging real estate market is a good way to describe New York City. I think that's an understatement.
Tim is always hungry, so ask your food questions.
Yeah, how much of revenue is from food? Because I know that you're increasingly making a food menu part of this.
25%, believe it or not. So when we first opened, we were 3 to 5, and we've grown it. So we've done a great job with, we did breakfast burritos and we do a lot of gluten-free stuff. It's really, really, my son is celiac. And so we just started carrying that stuff and have really grown and people love it. So tons and tons of food options.
Well, listen, this was really fun. Good luck and look forward to checking in with you maybe down the road again. Be well. Enjoy the rest of your summer and have a good fall.
Appreciate you having me.
You bet. Brennan Knudsen, he is co-founder, chief executive officer of Ziggi's Coffee, joining us from Mead, Colorado.
Enjoy your summer. I mean, he's working 24/7, Carol. There's no break for this guy. You can tell.
What did he say? Out of the 20 years that they've done, 12 were like,
it
was struggling and stressful.